Welcome to The Explainer. Today we're tackling a massive question, one that's facing the world's largest economy. Should the United States actually create a digital dollar?
Now, you've probably heard all about cryptocurrencies like Bitcoin, right? Well, this is something totally different. A digital dollar wouldn't be some volatile private asset. It would be official, government-backed, the real deal. Think of it like a digital version of the cash in your wallet, but it's issued and guaranteed directly by the Federal Reserve. You know, this whole idea of a central bank digital currency, or a CBDC, it's not exactly new. The Bank of Finland was playing around with a version way back in 1993. But lately, things have really started to speed up. The Bahamas and Jamaica rolled out their own CBDCs in 2020, China's deep into a pilot program, and in 2022, the White House itself ordered official research into a US version. All this global movement is really putting the pressure on the US to figure out its next move. So to really get a handle on America's position, our first clue is actually overseas. What's driving all these other countries to jump into the digital currency game so quickly? What's the big rush?
Well, the whole foundation for this change is actually pretty simple. We're just not using physical cash as much anymore. We tap our phones, we use our cards, and that slow, steady decline of coins and banknotes has basically opened the door for new, digital forms of money to come in and take their place.
And what's really fascinating is that not every country is in this race for the same reason. For developing nations like the Bahamas or Ghana, the main goal is financial inclusion, reaching people in remote areas who don't have bank accounts. But for major powers like China, the motivation is completely different. It's more about tightening control over their own payment systems and pushing back against private cryptocurrencies.
Okay, so let's bring it back to the US. Because unlike these other nations that are focused on things like inclusion or domestic control, the United States is playing a very different and a much, much higher stakes game.
See, for the US, this isn't really about solving a problem at home. It's all about geopolitics. The main objective, the number one goal, is to keep the dollar's top dog status on the world stage. It's about making sure that as the whole world of finance goes digital, the dollar stays the undisputed king.
And yeah, China's digital yuan gets a lot of headlines as a potential challenger, but when you look closer, you see its limits. As this quote points out, the yuan is still mostly a local player on the international scene. So for now anyway, the dollar's global position seems pretty secure.
Okay, this is where things get really interesting. And frankly, a little scary. Because even if the goal is to keep things stable, the very act of creating a digital dollar could unleash some profound dangers right here at home. This is where the debate gets really, really complicated.
To understand the risks, you first have to understand how our money actually works right now. Most of us think of money as the cash we can hold, but that physical stuff only makes up about 3 to 5% of the total. The vast, vast majority of our money, we're talking 95 to 97%, already exists digitally as deposits in commercial banks. It's basically just entries on a ledger at places like Chase or Bank of America.
A digital dollar, though, would be different. It would be central bank money, just like physical cash. That means it's a direct liability of the government, which makes it 100% risk-free. And that sounds great, right? But it creates this massive, potentially catastrophic incentive problem.
This brings us to the single biggest danger, a process with a scary-sounding name called disintermediation. Here's how it could all go wrong. Step 1. A mass exodus. If you have a choice between a commercial bank account with a tiny bit of risk and a 100% government-safe digital dollar, you'd probably pick safety. Now, if millions of people do that, you get to step 2. Lending just dries up. Commercial banks need our deposits to give out loans for houses, cars, and businesses. If those deposits disappear, the credit system freezes, and that could trigger the final step, bank failures. A sudden outflow of money could set off a domino effect, destabilizing the entire economy.
And beyond that systemic risk to the banks, there's this really deep debate over privacy. Should a digital dollar be identity-based, where every single transaction is traceable? I mean, that could be a powerful weapon against crime and money laundering. Or should it be anonymous, protecting our privacy just like physical cash does, but maybe also creating loopholes for criminals? It's a fundamental trade-off, and there is no simple answer.
So, given these massive risks to both the banking system and our privacy, what's the verdict? Well, all the evidence points to a very clear, very deliberate strategy from the Federal Reserve.
And that strategy is caution. The Federal Reserve has pretty much adopted a wait-and-see approach, and most experts agree that's the right call. The potential risks of messing up the world's most important financial system are just too high to justify rushing in just to be the first one to the finish line.
So if, and that's a big if, the US decides to move forward, the design has to be all about safety. Experts have laid out some key recommendations. First, make it non-interest-bearing. This is critical to stop that mass exodus from commercial banks we were talking about. Second, think about using anonymous technologies like a distributed ledger, a DLT, for certain things like cross-border payments to balance security with privacy. Third, you got to start small, maybe a limited pilot program for just micropayments to test the system without risking the whole economy. And finally, the golden rule has to be prioritizing financial stability above everything else.
And this all leaves us with a final thought. The digital dollar isn't just another tech upgrade. It's a fundamental redesign of our financial world. It forces us to ask, how do we balance the incredible promise of progress with the absolute need for stability? Because in a system this important, getting it right is way more critical than being first.